Welcome to Trading the Close on this Tuesday. I'm Toni Valliere with Verified Investing. And here's what's making headlines today. The Dow drops as much as 500 points while Treasury yields near 4-month highs. Shares of PVH Corp, the owner of Calvin Klein, dipped nearly 23% before the opening bell after forecasting worse than feared annual revenue and profit. General Electric completes its breakup into 3 companies, marking the end of an era for the company. U.S. job openings barely changed last month, with the Labor Department reporting 8.76 million job vacancies in February. That's up slightly from the 8.75 million in January. The Job Openings and Labor Turnover Survey, or JOLTS, shows that layoffs went up 1.7 million from 1.6 million in January. And U.S. crude oil cracks $85 to hit the highest level since October. Let's get a check of where things stand. Just minutes before the closing bell, we've got the Dow down right now 254 points, 0.65%. The NASDAQ down 157 points, 0.96%. The S&P 500 down 33 points, 0.63%. Oil is up just over $1. We've got gold up $26 and Bitcoin down over $3,500. Let's bring in Chief Market Strategist Gareth Soloway today. Continued to see that down trend in the market, and the S&P 500. I would love to start with that.
Yeah, absolutely.
See where that's at. We did see a breakout. Is that correct?
Well, so you saw that continued downside in the S&P today, right? So we closed yesterday up here. This is where we opened on the 10-minute chart. So each of these candles is 10 minutes long. It gives you kind of a play-by-play of what the markets did throughout the day. And what we can see is that for the most part, it was sideways to slightly higher, right? We opened down here after closing up here yesterday. We went kind of sideways to slightly up. You can see again towards the end of the day turning up just a little bit, but still it's a down day. And again, what we have to remember is that we know that on the daily chart, that wedge pattern broke to the downside and confirmed. So this should be no surprise that we're seeing some downside in the market. Now, if you look at this sideways to upward move, I want to show you why the markets went sideways to up today. And we flip over to the 10-year yield. And what did the 10-year yield do? So the 10-year yield in the overnight, this is overnight data. So this is before the stock market even opened, the 10-year yield was going up. What happened to the stock market futures? They were selling off because the yields were going up. So we started down here on the stock market and we've gone like this, and then you can see the 10-year yield has gone like this. These two work inversely to each other. So as yields were pulling back slowly today, the stock market was slowly creeping up. And again, that's just because it's all about the Fed, right? So it comes down to, is the Fed gonna, rates are going up, so people are saying, well, maybe the Fed's not gonna cut 3 times, so the market goes down on that. And then as rates were slowly fading today, the market was saying, oh, well, maybe they still will cut at least 2 times or whatever it is. It's just how the markets work. They're inverse to each other, the 10-year yield and the S&P 500.
So other things to look at today, I know Tesla was a big market mover. Deliveries dropped 8.5%. Rivian, Humana, CVS, Trump Media, another market mover, and PVH, of course.
Yeah. So let's take a look at Tesla real quick here. I want to just zoom out on this chart. So you did get a little bit of downward momentum here in Tesla. So we could see here, we're still kind of in this range here on Tesla, just making sure we are on Tesla. Yep. So we can see that, notice this channel, right? So you have this low here, come to this low here, and you can see we did have a flip right through it, but it quickly regained. And then we have these highs right here all the way down. So what we're seeing here is this mid dotted line. Look at how price keeps hitting that right along here. And it just seems to be a midpoint of the parallel channel. Now, again, the problem is that the more we kind of chop sideways, the more bear flag like it goes. Remember, this is a bear flag, you know, that kind of almost right angle or approximate right angle. And I'm worried that you still could see downside in Tesla down here. Now, the crazy thing about it is if this happens, Tesla could go down to about $75 to $80 a share, which is, I mean, we're at 166 right now. That would be a massive move to the downside. If that happens, the whole market's got to be down significantly, because otherwise Tesla's not going there. So just something to keep an eye on there. That's, again, a much bigger time frame. We're looking all the way back to 2021 up here when it was making its all-time highs. But again, you look at this chart, what happened to Tesla? It had competition. Price margins, the margins started to compress. Elon Musk had to lower prices on his cars. And again, going back to what we're seeing with the chips, the AI chips, I really do believe that this is going to be the future. You're looking at the future chart of NVIDIA 2 years out from now. It will look much like this because, again, their margins are going to, anytime a company has such amazing margins, it lures in competitors to try to compete. And eventually competitors have chips that compete, right?
Sure, and that'll lead to this. Okay.
Exactly. So we can let's look at Humana real quick, because I think this is an interesting chart. If we look at Humana, down again today, basically, again, I don't understand a whole lot of this, but we basically saw the government saying that they're going to keep the same policy as they had for the previous year for 2025. Has to do with money, how much money, I think, for Medicare and all this kind of stuff. But you can see big drop, and this stock has fallen off a cliff recently on the daily chart. But look at this down here, right? I have two trend lines that are converging, one coming from all the way back here through this COVID low, another one from this major low, same low, and you're starting to get close. Now, we're not there yet. It's around the 280 to 290 level, but this starts to look very interesting in that range of support. And again, we're starting to see oversold. You're getting almost a vertical down from $520 now to $300. So this is starting to look interesting as a swing trading opportunity.
Can I ask you something about this chart that I haven't personally noticed with other charts? So it may just be me not noticing this, but I see a lot of gaps on this specific one. I don't know if that means anything necessarily. Yeah, so what it tells us is that, especially over here, there's just been, when you get gaps, what it tells you is that there's just been bad news after bad news, and it usually comes out either pre-market or after the bell. And so that creates price movement after hours or before the bell when the markets is opening. So this has just been hammered, right? I mean, here you had a close here, and then it opened lower here, then it opened lower here. And so this is just bad news, bad news, bad news. And again, here again, bad news. What I like about that is a lot of people look at this and say, oh, this is so bad. I look at this and say, there's movement.
Maybe, well, and maybe everyone's getting too bearish on it. Maybe people are starting to throw the baby out with the bathwater, and that's when opportunities for a swing trader show up. When everyone else hates something, assuming it's a hardcore quality company, you start taking a closer look at it.
You got to have that part though, right?
Yes,
Good quality company.
Right, and that's very important because, there are companies that go out of business, right?
Yeah.
So you have to make sure it's a quality name. Are people overreacting? And again, the chart hasn't told me that fully yet, but it's getting towards those lower levels.
For sure. Okay, definitely want to look at Bitcoin, and then you can choose gold or oil, or maybe you do both.
All right. So we have, check this out. So on Bitcoin, we had that bull flag yesterday. I'm going to flip right here. So we basically had the bullish pattern. We got that weekly, monthly, quarterly close, which was generally bullish. And it just basically fooled everyone, pushed down. But look at this trend line. This is the one that in my game plans, everywhere I'm saying, just watch this line here, right? As long as price can hold above this, it's okay. It's not you don't have to start to really worry. Today we pierced it, but look, they're bringing Bitcoin's price back to that line. Don't be surprised if we close on or just above that line on the daily close today on Bitcoin. But either way, all I'm watching for is, do we close below, and then what do we have to do? We have to confirm it.
Yes.
Once you confirm it, then again, listen, it may not confirm. Maybe it just goes right back up. We'll have to find out. But if it confirms, then you're really talking about, again, we have this sideways area down here at 52, and then the 49 level was the spot ETF high. So that's my zone. I basically have a zone from here at 52 to 49. That would be, if we confirm below here, I would say there's a very high probability that's where we head.
Eventually, right? Doesn't necessarily mean it's going to be in that day or the next few days.
In fact, hopefully it's not. I mean, I'm a big Bitcoin bull, so I would not want to see a crash in Bitcoin straight down to that level.
Yeah.
I like orderly markets, because anytime you get these crazy moves in Bitcoin, it scares future investors away. Like someone that's kind of saying, oh, maybe I'm interested in Bitcoin. Well, they see something like a crash and they're like, okay, no, I'm not putting my money, right? So you really, even if pullbacks are normal in all markets, right? Except when the Fed is intervening and screwing markets up. But normally, pullbacks are right? So the kicker is, something like just orderly, just kind of drifting down, eventually getting there. That's fine. We see it in the stock market for the most part, like we talked about. But that would be orderly. It's when you get these big crashes and pops that I think it's a negative for the crypto markets. All right. What do you prefer? Oil or? So I think we got to look at oil here, right? So we definitely want to look at oil because we saw this move up where looks like today we're going to close right around $85 a barrel. Now, this is the zone, right, where we talked about lots of resistance. Now, you can see we're above this. So I'm watching this really closely. I'm curious, do we confirm this move above this range, or is this what we know of as a fake out where it doesn't confirm and then it reverses back down? I still believe that I think oil is going to roll over. I do believe that the economy is going to start to weaken. I know we got the JOLTS data today, which actually it was fine.
Yeah.
There was nothing to write home about there. It was fine, strong economy, at least on the job side. But tomorrow we get ADP, private sector, and then Friday the non-farm payrolls and the unemployment report. If there's any sort of signal of a weakness there, you should see oil start to roll over.
Think it'll impact
and actually, you'd see the market rally on that news. You know, again, weak economy. Everyone, it's so counterintuitive. You'd be like, weak economy, shouldn't the stock market do badly? But a weak economy means the Fed prints more. Everyone wants the printing.
Sure. This is over tensions in the Middle East, though, right? This is going up over that? Or
I mean,
I'm
not sure about that. I
factors?
think it's a bunch of different. I think China's stimulating, so their economy's picking up. Europe's doing a little bit better. So all these economies that were in really poor shape, the projections, and oil is really, the price of oil is not telling us what today is demand. It's like, it's always projecting 6 months out. That's just the way it goes. And so what they're saying is, all right, with all the stimulus in China in 6 months, the demand there is going to be more. Europe, and they're still on this, the U.S. economy strong, safe landing, no landing at all type scenario. So therefore, oil should go up. The question is, does that narrative hold true, especially for the U.S.?
Yes. Okay. And then Bitcoin.
Yep. We looked at Bitcoin. Gold. Gold. Let's do gold real quick. All right. Gold is just a rocket ship. I mean, I'm sure glad that I accumulated gold when it was below this area down here. It is just running, but again, it's starting to get to a point where I think it's going to be honest, and again, I'm a huge long-term, and this is what I want people to understand, is like I have physical gold, I have other gold holdings, I love gold, I still think it's going to 2,500, but it's getting to the point where I'm actually starting to think about shorting some. All right, so again, you know, just because you can be bullish in the long term and have core positions, but you could still hedge and short in the short term, right? And so what I'm looking at here is this longer term trend line. We get to about this 2330 level on a straight moonshot, and you have to start to think that you're due for a pullback. And again, this is just going all the way back to 1980, right? To 1980 over here, and we connect this high. If we hit this level, which we're getting pretty close to, you should have some sort of, just normal markets, you should get some sort of pullback, and then just buy the dip, and let's go up again.
Keep going, And I love the pattern, though, if you zoom in closer to that again, because it's so clear to see that.
Like, and this is what people got to understand, and people were saying I was crazy and all this, oh, gold's never going to move. But I mean, literally, I just recognize pattern formations, right? So what is this pattern? That's a up move, consolidation. It's consolidation, it's bullish. Look at that. All this is consolidation, right? So it should break out. Then you have the inverse head and shoulders. This is another classic TA pattern right here, right? There's your neckline. That's also telling you it's going to break up. Then you go to the actual macro data, and you're like, wait a minute. All the central banks are buying massive amounts of gold. And again, it's like, okay, well, ding, ding, ding. The central banks, the ones that control the printing presses, are buying all this gold. Maybe I should buy some too, because why are they doing this? It's like, right? So that, and then you look at inflation upticking and all these issues and the debt of the U.S., and it's like, yeah, gold does make sense. And so you kind of combine the fundamentals with the technicals, and it all told me that gold was going to go up.
Got to look at all the signs.
Yep.
All right, Gareth, thank you very much.
You.
We appreciate it. Remember, you can catch Gareth navigate the charts in real time every weekday morning at 9 a.m. on his show, The Game Plan, right here on the Verified Investing YouTube channel. Thank you so much for watching Trading the Close. We will see you back here tomorrow, Wednesday, with Gareth and verified crypto expert Paul Sampson. So make it a great rest of the day.